the CPD Standards Office webinar. The title of the webinar for today is Finance Demystified for Coaches and Trainers. Uh, a warm welcome to everyone who joined so far. Just a couple of housekeeping rules before we get started. Please use the chat for any questions. I would be answering these questions if you need any support throughout the sessions. But we have a dedicated Q&A session after the session is completed. So if you have any questions to be answered from the speaker, you can directly use that forum. This session is being recorded for our CPD community and been telecasted on the YouTube channel for the members who did not attend the session for now. So if you're not if you're not happy for yourself to be recorded on the YouTube channel, please turn off your cameras. And to avoid the background noises and all, we would be happy to have you all mute for the complete session. If you have any questions, please raise your hands or please put it in the chat so I can pass it on to the speaker. This would be a 45 minutes webinar with the followed with the Q&A session. And for today's webinar, we have our webinar guest speaker, Mr. Zahoor Bargir, who is the CEO of Unpuzzling Finance. Mr. Zahoor has been in finance world for over 20 years now. We just have our wonderful speaker, Mr. Zahoor. Thanks, Mr. Zahoor, for joining the CPD Standards Office Community webinar this month. And it's all over to you, Zahoor.
Great stuff, Naveen. Thank you very much. And good morning, everyone. Let me share my screen. And what a way to start your week with a bang, with finance, with myself. So my name is Zahoor. I'll be taking your session this morning. What I will say is, whilst it's a webinar, if you have any questions as we go along, then please post them on the chat. I'm going to try and make it as interactive as possibly can. This is one of those subjects where you will find you actually recognize a lot of what I mention, what I say. We all deal with money in some way, shape, or form. I'm going to show you finance from a how can I say, a corporate perspective, although you can also apply it to your own personal lives as well. But what I'm going to be doing is I'm going to be focusing on, and these are the webinar objectives today. We're going to have a look at the 3 financial statements, but I'm going to be focusing on mainly one of them only because of time constraints. We'll also have a look at the 2 main profits that most of you are probably aware of. And I'll also help you understand how we can use this information for our decision making. A lot of the times we look at data and it just looks like data, just looks like a wash of numbers. But underneath all of that is a language. It's a language that helps us understand how we're doing. So I'm going to actually open up by asking every one of you, put on the chat, how confident are you with this topic area? So 1, if you're very green, you're totally new to finance. 10, if you should be sitting here doing the webinar. Yeah, so let me know from 1 to 10, how confident are you with this topic area in terms of finance overall? How would you assess yourselves? Just giving me an idea as to yourselves and your confidence levels regarding this topic. So let's go. So Sarah's saying 4, Anu's going 5. I got Naveen saying 2, Aileen, you're saying 4, Rosie's 3, Jane is 5, Rachel 1, Joy is 3, Joanne is saying 1 as well. Majid is saying 5. You know, I've always learned something that whoever goes first almost sets the tone for the rest. For the rest. So if I had an 8 or a 9, I usually find others kind of go towards halfway or just above. So thank you all, because that gives me an idea in terms of where we are with this topic area. Now, I've mentioned the 3 financial statements. All organizations, yeah, whether you're a small, medium, large size organization, we all present and we all submit financial information from into 3 financial statements. Can you help me? What are the three financial statements I'm alluding to right now? Can you start me off with one of them? John's giving me the balance sheet. Absolutely, John. Jane and Nu have given me the P&L, the profit and loss account, and I've also got the cash flow as well. So John and Micheline have given me the cash flow. Absolutely, they are the three financial statements. And can you believe it? They're three financial statements that are uniform across the globe. So it doesn't matter what continent we're based in, all organizations present their information in these three financial statements. Now, I haven't got time to go through all of them. I'm going to be focusing on one of them, and that is going to be the profit and loss account. So what we'll do is I'm going to share with you the P&L from two perspectives today. I'm going to give you the profit and loss account as if you're a training company. Yeah. So what does what the P&L look like for a training organization? And I'm also going to give you the training account or the training P&L from a trainer's perspective. So, for instance, myself, I have my own training company, but it's literally just myself, even though it's a limited company. So we're going to look at the profit and loss account, looking at both of these two scenarios: the training company, who is delivering open courses, and then you've got the trainer who's the deliverer of these courses. So what I'll do is let me go ahead and take us to the Excel spreadsheet, my trusted Excel. So what I'll do is the notes that I'm going to put down, I will share these with you, share with you the PowerPoint and the notes that I'm going to put down here. Now, in terms of the profit and loss, the one statement that I'm going to be focusing on, the backbone of the P&L is three elements. Right at the very top, you're going to have income. Nearly always, it's going to be income at the top. The second element that is there of the P&L is what we call the expenditure. Yeah, and I'll come to those in a moment in terms of what these actually cover, what they are. And then you've got the balancing figure. Anyone like to help me out with the balancing figure? Income minus expenditure gives us, like I said, you'll recognize a lot of what I'm going to mention today. It is indeed profit. Yeah, it's a profit or loss. Now, here's the thing. Some of us may work with clients who are not for profits. Maybe it's a charity, maybe it's a social enterprise. The good thing about finance is it doesn't matter what organization you work in or what industry, whether you're for profit or a not for profit, this backbone still is there. You'll still have income, you still have expenditure. The only difference is for a charity or a not for profit, they won't call it a profit or a loss. What do you think they call it? What do you think they call a profit or loss at a not for profit? Sometimes they mean call them funds. Net income, now I gotta say that is a term used usually in the US. Yeah, net income. And you guys know this. You've heard of surplus and deficit? Yeah, surplus and deficit. So that profit or loss in a not-for-profit is known as surplus or deficit. Now, what John's mentioned, the income and expenditure statement, that's what a not-for-profit will call this statement. Yeah, so that's the name they give to profit and loss because a not-for-profit doesn't exist to make a profit. So yeah, they call it a surplus or a deficit, but that's the wonderful thing about finance. Once you know the fundamentals, you can apply it to whichever industry you're working in. So the one thing about finance, I will say, and you guys may know about this, is that we love our jargon. Yeah, lots of terms for the same thing. Now, if I open up with the income first, Can anyone give me another name for income? You can see we're building the P&L. What would be another name for income? It is, yeah. Income is another name for revenue. Thank you, Majid. Thank you, John. Yes, is another name for sales. And anybody else? Oh, there's one more term. Well, a couple of more terms. Beginning with T. Turnover. Turnover. Absolutely. Turnover. And can you believe it? They all mean the same thing. Now, if we're in retail, sometimes they even know it's takings as well. Yeah. But they all mean the same thing. And in essence, income is what we generate when we provide goods stroke services to our customers. Yep. So that is income. Now for us, we provide training services to our clients, and as soon as we provide those services, that's the income there for us. Yeah, and that's what gets generated. Now that is different to cash flow. Cash flow is slightly different to income and what that is. So we're just looking at what services have we provided, and in return, what's the income that we've generated as a result of that. So we'll come back to income in a moment. What I want to do now is I want to just go to expenditure. Now, there are two types of expenses, yeah, and you'll see these two types on the profit and loss on any P&L that you see. Now, the first one is a direct cost, and the second one, surprise, surprise, you got it, indirect, yeah. So you got your expenditure put into two camps. You got your direct costs, you got your indirect costs. Now, some of you may have heard another name for your direct cost, and it's cost of sales. Yeah. Now, both of those names are fine. I like direct. And I'll tell you why I like direct costs, because your direct costs, these costs here, are the costs that we incur to help us generate that income. So I mentioned, imagine you're a training company, and let's say you're a training company who delivers open courses. So it could be open courses at your venue, at a hotel venue, at another venue. Now, the thing is, you will have a course run. Yeah. So let's just say your delegates are going to pay £500 to attend the course. And let's say you're going to have 12 people attend. Yeah. So you're going to have 12 people attend at £500 a time each. Now, some of the costs that we incur to be able to provide that service, if we've got, if we're going to book a venue or another kind of, or a hotel or something like that, so we're going to have venue costs. Yeah, because now if you've got offices and those offices are open for your courses, then great. But otherwise, we do need to have hire a venue to run our session. Help me out, guys. What other costs would you need to incur if you are running open courses? What else would you say? Travel of the trainer. Yep. So you got trainer costs. Sure. Yep. So you got trainer costs. You got travel of the trainer. Now, food, that's an interesting one. Food, possibly refreshments, depending on what the venue is going to give you, right? Because here's the thing, at the venue, they may say, look, we'll set you up with lunch, and it's going to be this kind of lunch or this kind of lunch. We'll give you refreshments as well during the course of the day. Yeah, so that is what it is. Now, here's the thing. These costs here are directly related for this one open course that I'm running. So you got venue costs, definitely going to have that. Your trainer cost, you got the travel, for the trainer, depending on where he or she are coming from. You've got refreshments. You've also got materials, haven't we? Yeah, got materials as well that we're going to be needing. Now, they could be using their laptops. I get my delegates to use laptops, but some people like to just scribble on a notepad, and they like a workbook as well. So you may have costs for materials as well, depending on the type of delivery that we're giving. Now, let me just put some numbers here. And let's say the venue costs are £1,000. Let's say the trainer is 1,000 as well. Yeah. The travel for the trainer, I'm just going to put in, let's say 200. Yeah. Because they may travel and possibly accommodation as well. Yeah. Possibly hotel. Just in case, depends where they're coming from. Refreshments, I'm going to say the refreshments are part of the venue costs. Let's put 0 there. And then materials, we're thinking prudently here. Let's put 5, actually no, let's put 300. And that gives us 3,500. Yeah. Now that 3,500 is what we make from delivering that one open course. The one open course that we're delivering right now is 6,000, so £500 for the 12 delegates who are attending. And then we've got these costs here that we've had to pay out to deliver the session. Now, this is the first profit that we come to in the profit and loss account, which we call the gross profit. Yeah, and I'm going to come to other profits in a moment, but what you've got is the gross profit is the first profit in the P&L, and that profit there is the first measure of whether that course, that open course that we're running, is that bringing in enough to pay for its expenses. That's the first profit. So are we making money on that one open course? Yeah. Now I'm looking at the P&L. We got a few profits here. How many profits are there, do you think? Now that's not a religious question. Yeah, we're still sticking on the subject of finance. But what would you say on the profit and loss account? How many profits are there in total? Would you say? So John is saying 3. Majid is saying 4 to 5. Yeah, so there are 6. Yeah, 6 at a minimum. Yeah, and there are 2 which we probably are very familiar with. The first one is the gross profit. Yeah, that I've highlighted there. And the second one is the good old, let's say net profit. Yeah, so you got the gross, got the gross profit, got the net profit. Now what I'm going to do is I'm just going to divert just very quickly to over here to another worksheet. And the reason why is because when we hear the word gross and gross profit, sometimes people thinking, taxes. Isn't that inclusive of taxes, etc.? So now this is the thing about finance. We have gross profit, we have gross salary, and we have gross invoice. They all look at 3 different things. And this is why sometimes we could get confused by the language that we use in finance or how finance describes certain things, because gross and net is different depending on the situation. Now, the gross profit I mentioned is less the cost of sales, right? It's less the direct cost. Now, what I'm going to show you in a moment is that the net profit is when we've taken off all the other costs. Because so far, what we've done is we've taken off just the cost that I've incurred for the open course, but I've not taken off all the other costs that we have to incur as an organization. So I need to take off all the other overheads as well. And I'll do that in a moment. We'll come to that in a moment. We've then got gross and net salary. Yeah. Now, gross salary is inclusive of taxes, and your net salary is what you end up with in your bank account. So this is excluding after your taxes have been taken out. And finally, you've got your gross invoice. Can anyone tell me what's the gross invoice? What's that include? It does indeed, the VAT. Yeah, so your gross invoice is inclusive of the VAT, and your net invoices is excluding VAT. Do you see how we can easily get confused between gross and net if we're applying it to one scenario? Because a lot of us know about gross and net salary, and we know that difference is to do with taxes, but actually that's got nothing to do with profit. Yeah, profit, the gross profit is only when we've taken off the direct costs for that open course. Now, what I'm going to do is, before I even go into the overheads, let's have a look at the trainer. Yeah, this is the trainer limited. So there's you, the trainer, and you've got your limited company. Yeah, so what you do, you deliver the training courses to, you may have a few clients of your own, you may deliver training courses for other training companies. And so what you've got, the trainer will also have income, and their cost over here, let me just this like this, they are getting paid for the delivery, yeah, of the course. So let's say they apply their trade to a training company, and they're going to deliver this, let's say this one finance course. Now, for them, for the trainer, what they generate is the delivery of that course. And you've got this training company that's paying the trainer £1,000 for delivery. And in the trainer's accounts, here you've got £1,000 for them delivering that training course. Now, just like the training company, the trainer also has expenditure. Yeah, because they too have a limited company, as opposed to, let's say, a PLC or a partnership or self-employed. They're slightly different scenarios. So the trainer still has expenditure and they still have profit or loss there. However, and you still have these two, you still have direct costs and indirect costs. And I'll come to more of this in a moment. But here's a question for you guys. For the trainer themselves, what would be the direct cost for the trainer for them to deliver the training? There's an interesting question, isn't it? Because they still have expenditure. They still have expenditure. Now, for the trainer, their cost is most likely travel. And Micheline has mentioned transportation materials for the program. Well, the materials for the program will be taken care of by the training company. Yeah, because the training company, they'll say, Zahoor, we want you to go to this hotel. Well, this is where the training is. This is the training venue tomorrow. And what they will do is they will take care of the material costs, wouldn't they? They'll take care of posting the material costs to the venue, making sure everything's there. The trainer just rocks up. Yeah, the trainer arrives, and the trainer will probably have their travel, depending on where they're coming from. Now, I'm based in London. If I got training in London, I'm not going to charge that cost to the training company or the client because it's just London, it's local. But what you'll have is if they're traveling, let's say from the Midlands for a training course in London, let's say this is £200 for the trainer. And what the trainer should do is they should add that as part of their income as well, because the travel cost is borne by the training company. Yeah, it's borne by these guys over here. So over here, you'll also have reimbursement of travel. You see that there. Now, John has mentioned, what about time? For instance, John, are you thinking of preparation time, prep time for the course? Is that how you mean time?
I'm thinking in terms of allocating time based on an hourly rate for the training course delivery.
So that's the £1,000 there, in terms of how much they've generated.
That's
So
turnover, yeah, but they have a cost.
So are you talking about opportunity cost here?
Yeah.
Yeah. So opportunity cost won't form part of the P&L. Yeah. Because for the trainer's perspective over here, now we're probably thinking, now John's thinking, okay, are we talking about trainer's salary? So the trainer's salary won't go here as well, because why do we have the gross profit? The gross profit is there to show us now. Yeah, the gross profit is there to show us how much am I going to make from that delivery. Yeah, that is what the gross profit is showing us. Daryl's mentioned, will this record be shared? And Daryl, it will be, yes. So the gross profit is telling you how much are we making for that delivery. Now, if you're a trainer, it's cost you £200 to travel. Let's say you're traveling from Birmingham to London. It's costing you £200 to travel, but you're also charging £1,000 for £1,000 for your time. Yeah, for delivery. So you're going to charge 1,200, but 200 is literally a cost to yourself. So effectively, what you're making is £1,000. So there you've got it. You've got the training company that's delivered, that has set up the open course, got the delegates and everything else. Now, I mentioned that the training company, you may have marketing there as well. Yeah, because if you're the training company, you may have marketing costs there as well. Let's just say there is no marketing costs in this instance. Actually, no, I'll put marketing costs in there. Let's put £500. Yeah, in terms of Google Ads and what have you. So you can see now the gross profit the training company is making is £3,000 for running that open course, and for the trainer, it's £1,000 they've made, and 200 on top, but that 200 is basically taking into consideration the travel. Now, if the trainer has preparation time, let's say there's a specific type of course that this training company wants to deliver. Let's say I deliver finance courses and they wanted me to do something on investments. I may say, actually, you know what, that's something new. I'll need to do preparation. And this is where what John mentioned comes in. My time is £1,000 divided by 5, working on 5 hours per day, let's say. So if I go on that basis, my prep is £200 an hour. And if I had to prep for this course, I may say 2 days. Yeah. And if it's 2 days prep, then I would have to charge on top of the delivery the prep time as well. Now I'm not gonna put that on here for now, but just want to make sure that we should be charging for preparation time as trainers, because it takes up our time and effort. Yeah, that's what we should be doing. I find a lot of trainers, they do a lot of preparation, and often it takes more than just 1 or 2 days because it's a subject that is fairly new, or it has to be bespoke, and they don't charge for their time. But we do have to charge for the time because it's effort and time, and training is the preparation is absolutely crucial to having a good training course. So make sure, if you are a trainer, you do charge accordingly. And what I do is, if I'm charging 2 days preparation, I charge for my preparation the same as I charge for delivery. I know some organizations, they say, well, we'll give you 1,000 for delivery, but we're only going to give you half for preparation. I don't think that's fair at all. And I usually say, well, look, guys, it's my time. I'm going to spend 2 days preparing. And if I wasn't preparing, if I wasn't spending that 2 days preparing, then I would be doing other things with my time. So I usually always say, whatever your delivery charge is, make sure you also do the same thing for your prep as well. No giving a discount for preparation, not unless the client is giving you 30 deliveries, then that's another thing, isn't it? Yeah, but if it's one delivery, then it's usually 2 days prep or 3 days prep, especially if it's a new subject for you. Any questions? Any questions for me on the gross profit? That's the first one that we've come across. Any questions for me on that one? Okay, so what I'm going to do is I'm going to segue across to, once again, the profit and loss account for Training Company Limited. Yeah, so I'm going to put that there. And we've got the profit and loss for the Trainer Limited as well. Now, what I've done here is I've said, we're generating £6,000 for your open course, one open course. And what I've said is over here, let's say we're delivering 20 open courses during the year. Okay, so 6,000 times 20 gives you £120,000 income that you've generated this year. Now, obviously, if you deliver 20 training courses, then you're going to have increased direct costs as well. You've got 20 times as much venue costs, you've got 20 times as much trainer cost as well. You've got the travel, yeah, and I put down 4,000 there, and then you've got material costs of 6,000. So the gross profit is 70,000 when we've taken off those direct costs from the income that we generate. Now, the whole thing about running a company, though, is it's not all about the delivery. We've got to make sure we take care of all our other costs as well, right? So we have other costs to consider to keep the business running. So, for instance, we've got to think about the rent, yeah, the rent of our offices from where we conduct our business. We've also got to think about our salaries, yeah. So let's say you're the director of the company and you're taking a salary, yeah. So the director's salary comes out here, yeah. And the reason why we don't take it out from this section over here is because this cost here is the cost of the trainer helping us or the trainers helping us deliver this income. Yeah. So the director who's managing the business, and you may have other people there as well, their costs usually come out of what we call the overheads. Guys, any other costs that you can think of that we need to take off from your overheads? Any other costs you can think about? What are they? So you got your rent, you got your salaries, you got your insurance, absolutely. Got your insurance costs and your office expenditure, yeah? So you got them as well. And you can see what things come out here. You can say utilities, yeah, your gas, water, and electric. And you've got all the other, maybe put it here, you got your rent, your rates, and service charges. Yeah, depending where you're working out from. Now, let me put some numbers in here. Yeah, in terms of these are the costs that I incur for my office. Now, let's say your rent is £500 a month, and that's going to cost, so 500 a month times 12, so that's going to be £6,000. Now, director's salary, if you're a limited company, you should have an accountant. The accountant will tell you best to give yourself a salary of 12,570, yeah, because that's a personal allowance threshold. You've then got insurances. Let's say insurance is £2,000. Office expenditure, I don't know. Let's give it £1,000, eh? And then utilities, what's got like £100 a month, so 1,200. And guess what? There's your net profit. Now that net profit is what we pay our tax on. Yeah, so that is the tax that we are paying on the profit. And then we've got the profit after tax there as well. So you got to pay the taxes first from your profit. Now, if you're not sure, before you go to your accountant, if you're not sure how much your tax is going to be, I would always recommend whatever your net profit is, just charge 20% of that. That's how much money you should be setting aside for your company to pay the corporation tax. Okay. And then you've got your profit after tax. Now, I mentioned the director gives themselves 12,570. Now, unless you're living somewhere in the 1970s or 1980s, 12,000 is not going to take you very far, is it? Not. Forget about London. I'm talking about outside London. Yeah. You're not going to get much, I mean, for 12,000. So you're going to have to take out dividends from this money over here. Now, how much dividends you want to take out, it's entirely up to you. Let's say you take out £30,000 dividends. Now, the reason why we have dividends there is because it's a lot less tax. Yeah. But people think it's tax saving. However, we're also paying corporation tax here. So it's not much of a saving because your company still pays tax and you as an individual pay tax. Yeah. So this is the company tax. And then you as an individual are going to have to pay tax on the 30,000 and the 12,000 there as well, although that 12,000 is tax-free. And so what we're left with equals the sum of, you're left with the final profit, which we reinvest back into the business. Yeah, so that is what it is. Now, in a nutshell, guys, that is your P&L. That is your profit and loss account in a nutshell. Shall I show you that from the trainer's perspective? Yeah. Now, from the trainer's perspective, let's have a quick look at this person here. Now, you've got about 260 days a year that you can possibly work, right? So 365 divided by 7 multiplied by 5, and I got about 260 days. Now, let's just say you're charging £1,000 for your time, for your deliveries, and that's how much you deliver. So you got 100 days that you work a year, and you're charging 100,000. That's how much you generate. It's not bad income, is it? Yeah. So that's your income for your delivery and prep. Now you've got your direct costs. Your direct costs will be your travel. Now let's say your direct costs are of travel. How much? I'm going to say £2,000. Okay, that's how much you're charging for your travel, but that's what you incur. Okay, for yourselves. Everything else, any kind of additional travel, you recharge to your clients. So look what you've got as a trainer, your gross profit. As a trainer, your gross profit is £98,000 because you've generated it 100,000 for your income, and you've taken off 2,000 for your travel to client locations, which is all allowable. And you're showing £98,000 gross profit as opposed to a training company that generate 120,000. But then remember, we only put 20 open courses there, so they're making around 70,000. So the trainer still, because remember the trainer still got a company, they still incur these costs over here as well. So the trainer still has to allocate a certain amount for their rent, and all of these can be associated with the trainer as well. Yeah. Now, if you're a trainer and you also work from home doing online training, a bit like what I do, you can charge all your mortgage or all your rent to your company. You've got to be reasonable in terms of how much of your rent would you say, how much of your premises do you take for your work. And HMRC say, yes, you can have a certain allocation of your annual rent for your business if you work from home. And a safe amount is usually, and it's not tax advice, by the way, but a safe amount is usually between £2,000 and £4,000. Yeah, at least it's not seen to be excessive. Now, let's say I'm going to put down the lower amount of the two, 12,000. Let's say your salary is that you're going to take as a director is 12,500. Your insurance is not going to be so much, it's just be £200 because that's your personal indemnity insurance. And then office expenses, I don't know, £500. Let's say you got a printer and things like that. And then gas, electric, let's say another 500 you're going to allocate there as well. So as a trainer, your net profit is £82,000. Yeah, because your costs that you take off as a company aren't going to be as much as the training company. Yeah. Now the training company, they've got the director there, but they may have other people working for them as well. And because you're a limited company, let me just copy this there as well. Yeah. And that's how it is. Yeah. For the trainer too. Now, why do I share this with you? Let me tell you why I share this with you. I share this with you because I had a friend. Well, I got a friend, and both he and I used to work as trainers. Right now, I carried on work as a trainer, and he always used to say, "Zahoor, you know what? I just want to have my own training company. That's what I really want to do. I want to grow this training company." And I said, "Okay, well," and I said, "Pete, go for it." And he, honestly, lovely guy, and he opened and so ambitious as well. And he opened his training company. And I got to say, within 2 years, his training company was turning over £1 million in income over here. What he didn't bargain for so much was he started doing less of the training because he started doing more of the marketing. So he had to work on the business. He had other sales staff generating the courses, and he also had to do training for himself, but he also had to hire trainers as well. In the end, what happened was he realized that even with £1 million turnover over here, when he took all his costs off, he actually realized that what he ended up with wasn't so much. And in the end, he just said, you know what? Even though I end up with around £200,000 more as a company, he goes, I prefer my life as a trainer. And so he went back to being a trainer working for himself again. I got to say, he's doing really well for himself as a trainer, but he eventually chose to have that lifestyle where he said, actually, you know what? I've done the training company. I wanted to know what it was like. A lot of effort, a lot of income, but also a lot more cost as well. And then he compared that to when he was a trainer, and you can see these numbers, what these numbers show. Now, by the way, these numbers they're not wholly accurate, but at least they give you the gist of what we need to consider, yeah, depending on what side of the business we're in. Are we working for ourselves as a limited company, or are we going to be a training company providing lots of other services, training services to our clients, and having lots of associate trainers or maybe even full-time trainers, you see? And this is how we need to be looking at in terms of numbers, in terms of finances. And that's what your gross profit is there for. Your gross profit tells you how much are you generating from the services that you provide. So for us, it's training companies. And then we've got to make sure that the gross profit that we're making, does that cover my overheads? Yeah. Does that cover my overheads, whether you're a trainer or whether you're a training company? These are things that we've got to be thinking about. And the other thing we've got to be thinking about when you're a limited company is you've got 2 taxes, haven't you? You've got your tax for yourselves that you submit as self-assessment that you've got to pay at the end of the year in January 31st. And you've also got the corporation tax. So you've got the tax from the corporate side, and you've got the tax from the individual side as well. Now, James asked a really good question. Where do marketing costs sit in the P&L? Well, for the trainer, you probably wouldn't have marketing costs because maybe you're getting your name out there, word of mouth, maybe making phone calls to training companies, or if you're looking at marketing costs for corporates, then you will have marketing costs. Now, it depends. Are you marketing a specific course? Are you marketing your organization? If you're marketing a specific course, let's say I'm marketing my finance course, yeah, then I would say marketing would go here. Yeah, if I'm marketing my finance course. But if I'm marketing my business, then marketing would go here because it's more generic. You see, so these are generic costs, and these costs here are specific for that course. So this is the thing, I find myself turning down a lot of jobs. And the reason why I turn down a lot of jobs is because of this here. Yeah. Usually they may say, well, look, we'll give you this much for the whole thing, but you've got to make yourself get there. So sometimes when I add up all the costs, I think to myself, actually, you know what, it's not going to be worthwhile for me. And I find myself turning down the job more than anything else. So so these are the things that we need to be thinking about, yeah, when you're looking at your numbers. Now, let me tell you how much it helped me as a trainer. Now, I used to be a soft skills trainer, and I used to do all the leadership and management training courses as well as the finance training courses. But I spent my life prepping in the evenings, prepping on the weekends, and delivering during the days. And I had hardly ever a life. One divorce later, I realized this. I can't keep doing this. So what am I going to do? I said, okay, so what do you want to do? So I was delivering about 35 training courses. And I said, you know what? I've got to generate more income, but work less. So what I did was I then niched down. I said, okay, well, I'm not going to be a leadership and management trainer per se anymore. I'm going to niche it down to what I really enjoy and what I'm really good at. And that's when the finance training came in, because I've been an accountant for over 15 years. Numbers kind of are something I'm comfortable with. And I hope that I can explain things in a nice, easy, understandable way as well. And so I started just focusing on my finance niche, yeah, finance training courses. And what I ended up doing was I charge more for my daily rate because my time is my time. But now I've kind of shown myself as an expert. I charge more for my daily rate because now you're getting a finance expert as opposed to a generic trainer, which I was before. And I spent less time thinking. Yeah, because now when I read, I go more into depth of things, and I still train. I still go to courses. I'm still learning. You never know everything. It's, in fact, the more you learn, the more you realize, the less you know. And ultimately, that increased my gross profit there, and then eventually that more than was sufficient for me to cover my costs there as well. Yeah. Now, here's one final thing, and then I'm going to open it to questions. I'm just cognizant of time. If I say margin, what would you say to that? What do we mean by gross margin? We've probably heard of that term, haven't we? Gross margin. So when we hear the word margin, what we're doing is, John's mentioned gross profit before allocation of business overheads. So that's the gross profit. That's the gross profit. So the margin is simply converting the profit into a percentage. Do you see? That's what it's there. That's what the margin is. And I tell you why the margin is good is because regardless of your income, you're comparing your cost, and you're basically saying, for every pound I sell, how many pence am I making? How much do I make per pound? And that's going to help take care of my overheads. Yeah. So the formula is your gross profit divided by your income multiplied by 100. And here, what we're saying is, for every pound I sell of product A, I make 17 pence in the pound. If I pull that all the way across, you can see, well, product B is great, isn't it? For every pound I sell of product B, I make 83 pence in the pound. And this is what helped me focus my attention on finance training. Because what I realized was a lot of my time was spent in prepping for body language and report writing and presentational skills. I had to do a lot of preparation for that. And I couldn't charge as much. But here I found a sweet spot where I can maybe charge a bit more of a premium because I'm now known for finance training courses. And at the same time, I don't have to spend too much prepping because I've already got materials, and that helps me. So margin just tells you, and I would do this, guys. If you deliver training courses, do this. Find out how much you charge for the training course, and give yourselves a rate of how much you cost for doing your preparation, and be honest. Yeah. And I tell you how much it was for me when I first started. So my rate is I said, okay, well, £100. This was about 10 years ago. Yeah. So I gave myself an hourly cost of £100 for doing preparation. And how much am I charging? And I found that there were some courses that I was working so hard for, and I was really not getting enough in return. So that's when I had to get rid of those courses. And that's when I decided my niche. And I've now got a bit more of a work-life balance and more of a focus. So to leave you guys on this thought, if you can put down your courses in this way, yeah, and see how much time you spend on your preparation and how much you generate, and then that will tell you how much you're generating per course. So any questions? So Joanne's had to leave. Thank you, Joanne. And okay, so I'm really sorry, guys. I can talk. We've got 5 minutes. Any questions? Or I should say, any other questions?
Thank you so much, Zahoor. It was so interesting. Even from I'm basically from marketing, understand zero about finance, but it was so simple, and for me to listen to this for the first time, and it was so welcoming. So the mic is open. Anyone have any questions? We are allowed to ask Mr. Zahoor. So thanks everyone for joining. So we have a couple of questions coming. Yes, yes.
So I can see a question from Rachel. Sorry, Naveen.
Yep.
Says, I'm a trainer, not a limited company, but do spend to attend conferences, networking events to market my training. So Rachel, you probably do self-assessment at the end of the year. And so that is a legitimate cost for you to put against your self-assessment. Yeah. So in terms of your attending conferences, your networking events, subscriptions, all of these are all relevant costs that you can put in your self-assessment as bona fide courses, costs against your marketing, yeah, for your course. Rachel's mentioned, do you have a formula for what to include regarding expenses? So what I will do, not a formula as per se, but I always if Rachel, you want to kind of see me after, or just drop me an email and let me know what you were thinking, and I can come back to you. I can make it a bit more specific. So the reason I say that is because you can't absolutely put everything in there, but what certain things are allowable is useful to know. James asks, how do you do the gross margin when you're a training company with lots of overheads? The gross margin. So Jane, you wouldn't do the gross margin, you do the net margin. Yeah, so the net margin is basically exactly, now this is why I love the margin. I love the margin because you just rehash the formula. Your net profit divided by your sales. So you see this example here. So as you mentioned, you've got lots of overheads as an organization. So now you're going to consider these overheads here. So equals this divided by your income. And that's your net margin multiplied by 100, just there. And the net margin is 39%. So you've got gross margin, your gross profit divided by your sales, and you've got your net margin, which is your net profit divided by your sales. So that's what it is. Any other questions for me, guys? Any other questions? I had to rush. My challenge was, can I get it in the time frame? And that's what it kind of went over a little bit by about 5 minutes. But what I will say, if anyone has any questions on anything that I've covered, by the way, I've only covered, so Rachel's asked for my email. So Rachel, let me just put it on here quickly. Now I have only covered the P&L account, yeah, and I don't want anyone to come out of here thinking it's all about the profit and loss, because it's the profit and loss account is just one part. There's the balance sheet, there's cash flow as well, and both of those are really important. So what I'm going to do is, because I've had very limited time today, I'm going to send everyone a copy of the book that I wrote, which includes all of that. Yeah, so it's called Unpuzzling Finance, and I'm going to send everyone an ebook version of that book, and you're going to see that in the email coming from CPD. So it's the one value I really wanted to add in addition to you being here today, and please take a read of that. And if you have any questions on anything that I've covered this morning, or any questions on the book, something not clear or anything like that, then please feel free to reach out at any time. That's 11 o'clock. Naveen, over to you.
Thank you so much, Mr. Zahoor. You're bang on time. Thank you for your wonderful time today, and it was so enlightening and insightful, to be honest. Just thank you messages coming from everyone, and most part of this session, everyone stayed. All the 21 guests who came on the session at the starting, everyone stayed. So it's a big kudos for you, and thank you everyone for joining the session. See you all next month. Thank you.
Thanks, everyone.